Large green lentils. Today's a big day for us as we are starting to cover the U.S. market as well as Canada. So if you're an American growing large green lentils, you will especially enjoy this analysis. My name is Trent Klarenbach with Clarenbach Research. Today is January the 14th, 2025. And to do the analysis, we'll look at the clarenbach.ca website, look at the member area on there. If you're a paid subscriber, you should have access to the member area. If you do not, reach out to me and I'll ensure that you do. So we'll look at the large green lentil page. You can see we have two different options here for both Canada and the United States. Let's start off with Canada here, and we'll look at the Canada page. We're having some technical difficulties, but we'll be up and running before long. So interestingly enough here, on our KPI index, our current price is at 59.8, so roughly that. And near the high of the year, so we're almost up trading at the high of the year for large green lentils, which is, and when I talk about the year, I talk about the crop year from August 1st on. Let's just scroll down to where the charts where it gets exciting here. So again, this is our long-term logarithmic chart. You can see we're trading below this long-term trend line, and we're hovering around that 60-cent level. This is the weekly chart, and it's a linear chart. You can see the equal increments on the y-axis, and you can see the different lines on here. I have this take profit price target up here. It worked out quite well for us last year, and we're hoping we can get close to catching them, get close to the top of the market again this year. But right now we're seeing some consolidation. We found this support at this previous support levels. We saw a rally off of this level of support, and now we're trading around that 60-cent level, and our moving averages are, the short-term moving averages are kind of below the price right now and rising up to the price. We're still remain above the 10-week moving average, which is keeping us bullish, but right now I'm neutral on this short intermediate time frame, neutral for the next 4 weeks until we start making a higher high or a lower low. I happen to think there's a little bit more room to go higher in this market, but that remains to be seen. In the long term, though, this is the downtrend. Our moving averages, longer-term moving averages overhead, they're in decline. We're below those moving averages, so I have to remain bearish on the long-term time frame. Now, this is our a logarithmic chart, and you can see that I anticipate that we're going to come up and test this previous resistance level. Maybe we have in some individual markets, but my price index has not quite got there yet. But that's around that 63-cent level. So let's see if we can get back up there. And that would be, a good strategy. It often is to sell at resistance. So if that's your strategy, it's not a bad one to have. A lot of people participate in that strategy. We'll have our moving averages overhead. It'll be coming down to the, probably if the price does get up there, it'll come down to roughly around that same area where the resistance level is. So it can be a good time to take some risk off the table. Again, logarithmic chart here, and you can just see that our moving averages are above and below the price. So we're kind of having the buyers and sellers are trying to determine who's going to win the control of the trend here, and that remains to be seen. If the short-term trend continues higher, or the longer-term trend takes over and we continue lower in the price. Let's go back and look at the United States market. So this is our first foray into the U.S. market. Now, some of this data here isn't complete. We're in the process of updating the website, and it's a work in progress. So I'm going to scroll right down to the bottom here. Look at the longer-term chart. Now, this chart here is for the U.S. #1 brewer. Delivered warehouse. It's the grower price in the Pacific Northwest. This comes from the USDA data. And interestingly enough, we can see how the price is hovering right around this previous resistance and support level. So previous resistance often acts as support, and we're seeing that right now. So the price is right there. And if we look here, we'll go up to the shorter term chart, and I zoomed in a little bit more, and you can see how the price is at $35 dollars per hundredweight or cents per pound. So let's talk in cents per pound here, and that's a previous support level. So right now, what I'm doing is I'm publishing a bearish sell signal. So if the price goes below 35 cents, that's the average price in the Pacific Northwest, dips below 35 cents, then that'll trigger a sell signal. How low can it go from there? Well, it can go quite a bit lower, but our next level of previous resistance possible support is around that 31 cent level. So we'll see how this makes the 32 cent level. So let's see how this plays out. Again, if we get a weekly average price below 35 cents, that is going to be a sell signal for large green lentils in the United States. I am neutral in the next 4 weeks on both markets, and I'm bearish on the longer term time frame in both. My name is Trent Klarenbach, sunny in Saskatoon. Life's good.